Good afternoon, great to have your company on Kalkine TV. I'm James reporting live from Kalkine Studio, and it's lunchtime here in Sydney, and that of course means it's time for the mid-market pulse. In today's show we'll take a look at the overall Australian share market performance by the mid-session trade. We'll also explore the biggest winners and losers of the day, and stocks that have grabbed headlines throughout the day, including Worley and Adbury amongst others. Australian shares extended their losses by mid-session as a sudden fall in material stocks as well as persistent sell-offs in the tech space dragged the market lower. Adding to the woes, looming fears about rising inflation and a potential US debt default also left investors jittery. The caution also prevailed in the market ahead of the Reserve Bank's monetary policy announcement, which is due later today. The benchmark index, the ASX 200, was down by 0.75% by lunch. The index opened lower and declined as much as 1% during the day's trading so far. The market followed weak cues from Wall Street, which finished sharply lower in overnight trades, led by tech stocks. The Dow Jones index dropped by 0.9%, while the S&P 500 plunged by 1.3%. The Nasdaq Composite was the worst performer, nosediving 2.1% on sharp selling in tech heavyweights such as Facebook, Apple, Microsoft, Amazon, and Google's parent company, Alphabet. Back home on the sectoral front, 9 of 11 sectoral indices were bleeding in red. The tech sector was the worst performer with a 3.5% loss, followed by A-REITs, which dropped by 1.65%. Amongst others, consumer discretionary, material, healthcare, industrial, telecoms and financial also saw a surge in selling. Bucking the bearish trend, the energy sector surged by 1.4%, followed by utilities with a 0.7% gain. Energy stocks saw a surge in buying after crude oil prices jumped to 3-year highs on Monday. The oil prices spiked after OPEC+, which groups the organisation of the petroleum exporting countries and allies including Russia, stick to its current output policy amid stronger demand for petroleum products, despite pressure from few countries to increase production. Adding to it, higher energy prices in China and Europe also augured well for oil prices. On the macro front, investors kept an eye on the Reserve Bank board meeting today. The central bank is expected to keep interest rates on hold for now. Meanwhile, in a boost to the market, Australia's trade surplus rose to a record high in August as strong liquefied natural gas and coal exports offset a fall in iron ore prices. As per the data released by the Australian Bureau of Statistics today, the surplus on international trade surged to 15.1 billion Aussie dollars in August, from $12.7 billion in July. Exports climbed 4.1% to $48.5 billion on the prior month, while imports dropped 1.5% to $33.4 billion. Another piece of data by ANZ showed the Consumer Confidence Index rose by 0.9% last week, the fourth consecutive week of small gains. Confidence increased in Sydney, Melbourne and also regional South Australia, whilst it fell in Adelaide, Brisbane and Perth amidst a rise in COVID-19 cases. On the COVID-19 front, New South Wales continues to see a sharp drop in case numbers, while Victoria's daily case tally continues to rise. New South Wales reported 608 new cases and 7 deaths overnight, while Victoria recorded 1,763 new infections and 4 more deaths from the virus. The new infections cases of Victoria were the highest daily tally recorded in the state so far. Let's now take a look at the top gainers and losers of the day. Tech stocks dominated the ASX losers chart. Software business Appen topped the chart by falling 5.9%. It was followed by Buy Now, Pay Later major Afterpay, which dropped 5.8%. Some of the other notable losers were travel group C-Link, investment management firm Pinnacle, and financial services firm Hub24. E-retailer Redbubble was the biggest gainer on the ASX pack, rising by a strong 7.3%. It was followed by gold mining stocks such as Gold Road Resources, Silver Lake Resources, and St Barbara. Energy major Origin Energy was also among the top 5 gainers. And before we continue with our latest commentary from the mid-market session, it is time for a very short break on Kalkine TV. Stay with us, as I'll be back with more updates in just a moment.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Thanks for sticking with us on Kalkine TV. I'm James Preston and you're watching the Mid-Market Pulse. Let's take a look at some of the stocks that have grabbed headlines today. First on the list is professional service provider Worley. The engineering group has secured a 2-year extension from Woodside Energy to provide engineering and construction management support to its project in Western Australia. The agreement covers brownfield engineering services, procurement and construction services to Woodside's Karratha gas plant and Pluto LNG project. Worley has provided brownfield engineering services to Woodside for over 30 years, utilising a variety of contracting models. The original agreement was established in 2018, and this extension is for a further 2 years with the option to extend further. Following the announcement, shares of Worley rose over 1%, while Woodside Energy gained over 2%. Next is Evolution Mining, that divested its stake in Mount Carlton Gold in Queensland. The miner has signed an agreement with Navarre Minerals to sell the Mount Carlton Gold mine, which includes the Crush Creek, for 90 million Aussie dollars. The transaction amount comprises of 40 million Aussie dollars in a mix of equity and cash, and up to 50 million Aussie dollars in additional cash payable upon the realisation of the recoverable gold and their production milestones. Navarre's economic interest in Mount Carlton will commence from the 1st of October, with the transaction expected to close in December 2021. Meanwhile, shares of Evolution Mining traded 1.5% higher, while Navarre shares entered a trading halt pending an announcement related to fundraising. Moving on now to supplier of construction materials Adbury, which dropped over 2% following an ASX update. The company has appointed Nick Miller, its chief executive, to the board as managing director in addition to CEO today. Miller had joined as the CEO of the company in late January 2019 with a salary of over 1.5 million Aussie dollars. The position as board director offers him performance rights worth a potential additional 1.524 million, which fully vest in 2024 should he meet certain performance hurdles. His remuneration package has also been enhanced by the inclusion of a component where if he was removed, he would be entitled to 1 year's pay equivalent to 1.524 million. The next piece of news comes from Australian investment company Washington H. Soul Pattinson. The share price of the company fell 0.5% after its shareholders approved a merger with Milton Corporation. Following the merger between the two local investment groups, an application has been filed to remove Milton shares from the ASX, which is expected to take effect on and from the 6th of October. All Milton shares not already owned by Soul Pattinson have now been transferred to the company and remaining Milton shareholders. The merger of Washington H. Soul Pattinson and Milton creates a leading diversified investment house with a significant market capitalisation and access to a range of asset classes including private equity, international equities, credit opportunities, real assets and ASX-listed investment and trusts. And lastly, OM Holding shares rose nearly 1% after Malaysia-based company issued an update on spike in prices of ferrosilicon. There is unprecedented increase in international prices for the ferrosilicon alloy produced at the company's smelter in Sarawak. The ferrosilicon price jumped 162% from its June quarter update. The recent surge in global prices is due in part to government policies in China relating to the ongoing power shortage, according to the company release. Well, that's a wrap for this edition of the Mid-Market Pulse. Keep watching Kalkine TV for more trending market updates from across Australia and around the world. I'm James Preston, reporting for Kalkine.